Our David Faber spoke exclusively with Liberty Chairman John Malone moments ago. Joins us now. Dave?
Yeah, John, I'm here in Denver, or outside Denver, at Liberty's headquarters for my annual sit-down interview with John Malone. We taped the interview. It will air, and large portions of it will air a couple of weeks from now when Liberty has their annual Investor Day. But of course, given the news that we got this morning about the possibility of a spin of the cable networks of NBC Universal, and of course, given John Malone's really unparalleled history when it comes to the cable business and the cable networks business, not to mention his incredible experience around very complex transactions, it seemed appropriate to share some of his comments, or his reaction at least, to the possibility of a spin of NBC Universal's cable networks. Take a listen.
Brian is a very smart fella. He's got good support in his team, and I think they're looking at these kinds of actions to basically increase shareholder value. If, after all, the way investors should look at Comcast, which is a slow-growing but very cash-generative business, perhaps the metric, I believe, that they start looking at is levered free cash flow per share, because Brian is both growing his levered free cash flow and he is buying back stock. So that metric is probably the best indicator of progress and success. And I think to the degree Brian can deconsolidate, but for the benefit of the shareholders, assets that don't contribute to that, I think that's certainly well worth considering. And I know they've been studying this at least since Sun Valley, when we discussed it with some of Brian's people.
Right, so that was Sun Valley last summer, let's call it early July. Important component of this as well that Malone and others have mentioned to me is at least one part of the possibility, and we can talk about all the reasons it might not actually happen, but is that a sale of these businesses would generate potentially a large tax burden for Comcast and for the Roberts family, but particularly for Comcast, given the low basis. So you spin them, but then there is the possibility that they could appeal to private equity, which has been quite active in buying similar assets. Think TPG and its very successful purchase of part of and soon to be all of DirecTV from AT&T a number of years ago. So private equity certainly may end up being the home, at least some believe, if in fact this spin were to come to fruition. One key question, though, is why wouldn't you include the NBC network along with the cable networks? And in fact, NBC News also would be staying behind, so to speak, with the parent of NBC Universal, which would still include Peacock, the Universal Studios, and as I said, the NBC Broadcast Network and the theme parks. Malone explained perhaps what he believes at least is the strategy behind that.
Well, my understanding of Comcast strategy, you know, I try to follow it. I am an investor in Comcast, is that the goal is to morph NBC, the network, into Peacock. It's just a change in distribution technology. But as time goes on and the public gets more and more used to random access content, that the plan would be to have NBC really become Peacock, to become indistinguishable. I think that's why Brian has focused on investing in sports, important sports, to give that transition.
Of course, sports includes the NBA rights, which, as you know, we've paid or Comcast or NBC Universal has paid a good amount for the next 11 years, beginning in the next season. You know, John, unclear exactly if this were to come to fruition. And again, it's early days. It is just being studied. Where would the entity trade? Would there really be sponsorship amongst them? Would you get a serious investor base there? You know, obviously some current Comcast shareholders might choose to hold on to it. Others would choose to sell. The multiple would probably be very low. It is obviously a low, if not negative growth business, but it does generate a good amount of cash flow. And as Mike Cavanaugh who runs NBC Universal, said on the conference call it would be well capitalized. So a lot yet to come, but certainly the first real sign we've seen of this this effort amongst the older media companies, so to speak, to figure out a way to deal with what are these continued and really unceasing significant declines in those who pay for cable via video, obviously. And
David, personal feelings aside, we've seen this before, say in technology. If you've got a slower growth business, like a hardware business, you separate that out, try to get investors to focus on what's growing, maybe something in software, and get a multiple for that business that's better than if you had the other business bundled in. I mean, it seems to me like with the core NBC, there are synergies between those core networks and between Universal Studios, right? Cross-promoting content between parks, and maybe less synergies, fewer synergies with the cable networks, no?
There might be. I mean, again, I think that's something that needs to be studied. What is the relationship between Peacock, the studio, and some of the entertainment cable networks, a la Bravo or, USA, E, and Oxygen, and those, for example. There's also a relationship clearly between CNBC, MSNBC, and NBC News, which would be severed to some extent. But you're right. The basic plan is that you would get, as Malone indicated, a higher multiple on levered free cash flow, which is the way he believes the business should be measured, and that you would get some multiple at least outside that, and ultimately perhaps private equity coming in and paying a reasonable price. Hence, you would be enhancing shareholder value. Although, as you pointed out at the very beginning of the segment, Comcast stock price has come in a lot from what were earlier gains.
All right. Yeah, again, personal feelings aside, maybe we'll get some price discovery. David Faber, thank you.